Pressure from exporters opposed to having part of their earnings converted to the weakening rand has forced a U-turn. The central bank will now pay half of export revenue into company accounts and keep the other half in bank RTGS accounts that will be used for electronic payments only. It will credit an additional 5% into the RTGS accounts as an incentive to exporters. The cash shortage has peaked due to over-reliance on the US dollar, which accounts for 95% of transactions. To encourage use of other currencies, in particular the South African rand, the central bank had proposed to automatically convert export inflows into rands and euros. Zimbabwe's largest trading partner, South Africa, is the source of more than 60% of its imports. Among the other measures announced last week is the introduction of bond notes that will operate alongside foreign currencies but can only be used locally. Now that sparked speculation that it could be the disguised return of the Zimbabwe dollar. There are fears the bond notes could fuel forex trading, rampant in the hyperinflationary era.
I don't believe there's a way that the government could persuade them that the value of those bond notes will retain the current claim that it will be 1-to-1 against the US dollar. I think the market will decide it should be 10-to-1, then maybe 100-to-1, and then maybe 1,000-to-1 within days of it coming out.
The central bank insists the bond notes are meant to curb externalization of cash. At least $1.8 billion was siphoned out of the country last year.
They are very fearful that people will move money out of the country if they get a chance. But the reason they're fearful is because they know that they have turned the country into an unattractive place to keep money, because you don't know what's going to happen to it. That's what's got to be changed. They've got to turn the country into an attractive place for the investor, an attractive place for possible new investors who might bring money in as equity finance, not loan capital. We need people to come here with risk capital, but feel that the risks are absolutely acceptable.
Zimbabwe has recently toned down its empowerment laws, which had been blamed for scaring away investors. Farai Mwakutuya, CCTV, Harare, Zimbabwe.